Portugal didn't become one of Europe's top property markets overnight. And it's not because of trends, not because of visas, not because of headlines. It's because the fundamentals kept working, quietly, while most people were looking somewhere else. In this video, we're breaking down why Portugal continues to attract serious property investors in 2025, and why this demand isn't going away. When investors look for property markets, they usually chase one thing: growth. But experienced investors look for something else first: stability. Portugal offers a rare combination: steady economic growth, political stability, and a property market that doesn't swing wildly with every global shock. This is why Portugal isn't just attracting speculators, it's attracting long-term capital. Portugal has proven something important over the last 2 decades. It survives crises. While other markets experienced extreme booms and painful busts, Portugal's growth remained measured and controlled. Tourism, exports, and services continue to support the economy, and real estate benefits directly from that consistency. For property investors, this matters more than explosive growth, because slow, predictable appreciation is how wealth compounds. Another reason investors keep coming: financing still works. Compared to many Western European countries, Portugal continues to offer competitive mortgage conditions, especially for international buyers. Lower barriers to financing increase liquidity, and liquidity keeps markets healthy. When buyers can enter and exit without friction, prices don't collapse, they stabilize. Tourism in Portugal isn't seasonal noise, it's structural. Millions of visitors arrive every year, supporting short-term rentals, serviced apartments, and hospitality-driven real estate. But here's the overlooked part: tourists often become residents. Students become renters. Digital nomads become buyers. This creates layered demand, not dependence on a single tenant type. Investors often underestimate lifestyle, but lifestyle is what keeps demand alive when markets cool. Portugal delivers safety, healthcare, infrastructure, affordability compared to peers, and a climate people actually want to live in. That's why properties don't sit empty, and why rental demand remains resilient. People don't just invest here, they stay. One of the biggest changes happening now is infrastructure investment. New transport links, urban renewal projects, airport expansions, high-speed rail planning. This does 2 things. It unlocks undervalued regions. It protects established locations by limiting overexpansion. Smart money follows infrastructure early, before the headlines arrive. Portugal's property market works because it's not driven by one factor. It's supported by economy, tourism, lifestyle, financing, infrastructure. When one slows down, others hold the line. That's why demand doesn't disappear. It consolidates. Portugal doesn't need to sell itself anymore. The investors already here understand why they stay, and the ones arriving late are paying higher prices for the same fundamentals. This isn't about timing the market. It's about understanding why some markets endure and others don't. And Portugal, it was built for endurance.